Welcome to the podcast, My Favorite CPA. Of course, I'm CPA Dan Hodges, and today is October 26, 2023. Have we got a topic for you today? And that is the top 20 mistakes that business people, entrepreneurs, and self-employed people make. Given that there's 20 different things that we want to talk about, honestly, we're probably going to break this out into at least 2, maybe 3 different podcasts. So let me ask a favor of you if you're listening today. If there's something that you would like to hear more about, if there's something you've always wondered as a self-employed business person, entrepreneur, drop it in the comments. Love to hear it, and I would love to address something that would help you. Because at the end of the day, you, my audience, you're the reason why I'm doing this. So what I'd like to talk about, kick things off with today, is a very common mistake that I see business owners and self-employed people make. And here it is. I recognize when you're in business, sometimes getting started, it's rough. It's not easy. If it were easy, everybody would do it. And sometimes here in, at least in the area where I've grown up and spent the majority of my life in the Midwest, we're bootstrappers. We do what it takes. We put our boots on, we put our pants on one leg at a time. And sometimes to get things going, we do a lot of do-it-yourself work. And that's okay. There's a little bit of pride and maybe some work ethic that goes into that. But I want to tell you, one of the biggest mistakes as a CPA that I see business owners do is not knowing when to call in the professionals. And sometimes that starts on day one. And here's what I mean by that. And this honestly is one of the reasons why I founded myfavoritecpa.com. Business owners will start business. Sometimes they will start an entity. And why did they start it? Basically, and I know I speak for almost every accountant in the country. We will talk to someone who started a business, and we are so happy for them. And we ask them, what did you start? And when did you start it? And what did you do? And they will say something like this. I didn't know what to do. So either I asked the Google, or I asked YouTube, or I asked my friends. And they said, set up an LLC. Now, an LLC is great for legal protection, but from a tax standpoint, it's nothing. An LLC doesn't mean anything. In fact, it could mean a very bad tax outcome depending on what you are doing. So what I am advocating for you here is, if you're going into business, maybe you should have a brush up by an expert, by a professional on the rules of the game. And moreover, what game are you going to play? Because if you are doing business and going to be taxed as, let's say, if you're going to be taxed as a sole proprietor, the rules and how you play the game is very, very different than if you were going to do business and be taxed as a corporation. And for that matter, that's very different than the rules and how you would do business and how you would be taxed as a partnership. And for that matter, as a corporation, there are at least 2 major ways you can be taxed, maybe 3. There's C corporation and S corporation. There's also maybe not-for-profit taxation. That's not why we go into business, but there are some business ventures that make sense to do that way. So all I'm trying to tell you is, if you're going to go into business, having a conversation with an expert, not a YouTube search, not a Google search, not asking your friends as to, how should I structure myself? And what are the rules of the game? What are the upsides and what are the downsides? And not to pimp myself out too much or our program, but if you take a look at myfavoritecpa.com, I've designed a training course that's as easy as Netflix. You can sit down and watch it in a matter of a couple of hours and have a very good overview and frame of reference for what you may want to do The who, what, where, when, why, how. So check that out. And that is, I'm just putting that out there as the number one thing that I see business people do. Now, and that's a mistake. Imagine playing cards and having no clue what game you're playing. That's what I'm trying to say. So now let's talk about the second thing that I've seen over the years for people that they want to leave their their just over broke paycheck that is keeping them down. They want to leave that and do their own thing. Well, let's talk about the second thing. I haven't seen this in a minute, but I've seen this so many times over my career. Let's say you start your own thing and you quit your job and you're ready to, do what it is you do. If you want to lay in bed and sleep in till about, 9 o'clock or 10 o'clock, and then get up and kind of have breakfast and get ready and kind of start your day whenever you start it, as if it's a weekend or as if you're on vacation. Because in your mind, that's how you think entrepreneurs and business owners operate. Do you think you're going to be successful? I don't think so. The people that are able to transition from the land of employee land to self-employment land are the ones that get up every day and work it like a job. And moreover, work it like they have a boss that they have to report to. That's the kind of tenacity that business owners and self-employed people have. So if you don't think you can work that way, self-employment may not be the thing for you. Maybe you need to transition it by, maybe you should keep your job but move it down to part-time while you start to dial up your self-employment thing. If you're the kind of person where you're a little bit worried about your discipline and whether you can do what needs to happen. So really think long and hard and deep about, can I work this like a job? And what will the outcome be? Because the people that are most successful are the ones that get up every day and they have a plan. There's a national speaker who used to say, you got to have goals. This is Zig Ziglar, by the way. You got to have goals. Even crackheads have goals, is what I've heard him say at seminars. A crackhead is going to get up and say, I have to do this, that, and the other so I can get what I'm addicted to. And they have goals. So if you want to be successful in business, you need goals. You need to work it like a job. Second place, or the next place, the third place that I'd like to talk about is really having a good overview on how much you are bringing in. It's extremely common that self-employed people have made the transition successfully from being an employee to being self-employed. It's extremely common to be a technician. There's a couple business books that come to mind, but being a technician is good. If you are a plumber and you are making the transition from employee land to self-employment land, if you know how to do plumbing and if you know how to hook up sinks and run lines and set toilets and stuff like that, that is going to serve you because you know the technician side, you know the technical side of your business. And you have to know that to be able to make an income. But when you are a worker as an employee, you're kind of less concerned, aren't we, about how much that we are bringing in? What are we billing customers and how much are we bringing in? But when this is your source of income, when you are the boss and you have bills to pay, you have to know how much that you're bringing in. You have to know that for a myriad of reasons, not the least of which is you want to make it. But in addition, let's think about another reason. Ultimately, at some point, just think about this. The government is going to want to know How much did you bring in? So it's monumentally important that you have a system, a process, and a habit to keep track of how much you bring in. To me, it really boils down to habits. And if you worked for someone else, you've probably seen some systems, processes, and habits, whether it be handwritten invoices or computerized invoices. You need a system, a process, and a habit to keep track of how much you're bringing in. Let's talk about the next thing where in that transition, people kind of get things a little messed up. Now, here's here's an area where I see people fall down. Now that you've thought about how much you're bringing in, what you really need to think about is, how much am I going to keep? What we're talking about here is you have to think about your costs. So back to an illustration again. If you are a plumber, you really have to have a good handle on what materials and supplies is it going to take you to set a toilet. If you buy a toilet and everything's in the box and the flange is already there and all you're doing is setting a toilet, that's one thing. But if you have to bring a line over to the bathroom and set the flange, you have to think about all the material you need, the supplies, the tools. You got to think about your overall cost structure. Because if you are not thinking about that, and if you're just thinking about, man, in the land of things to be so much better in the land of being self-employed because I can just bring all this money in. In business, as entrepreneurs, self-employed business people, we really, if you think about it, we are funnels. We bring a lot of money in, but that money that comes in has to go for the cost of the toilet. It has to go for the closet flange. It has to go for the pipe. It has to go for the pipe tote. It has to go for the it has to go for all the parts. The bolts is actually what I was thinking of there. So you have to know all your costs, and if you know your costs, I would say over time, it's more likely you're going to be successful than the people that do not know their costs. And plumber is just one illustration. We can talk about every different profession, every trade. You have to know your costs. And the people who are successful, they know their costs. And if you know your costs, then you can decide whether you have the right price. Another area where we see people fall down as accountants, and this is huge, this is monumental. You have to be disciplined with your money. It is a must when you're making this transition. And it's so common that if people just throw up a shingle and they start doing work, it is common that they will commingle their personal funds and their business funds. How does that happen? Well, maybe they don't set up a structure like an LLC or a corporation. Maybe they just hang out a shingle and they are self-employed. It is legal from an IRS perspective to mix your money, your business and your personal if you are unincorporated. If you're incorporated, it's absolutely a no-no. It's absolutely a deal breaker. It's illegal. You cannot mix business and personal. But if you're unincorporated, it's okay. It definitely is okay to mix it. But even though it's okay, that doesn't mean it's recommended. And there's so many reasons why. Number one is clarity. If you're mixing it all together, it's absolutely unclear when you're looking at the balance of the checking account, how much is household, how much is business. It's unclear. Whereas if you have separate accounts, this is the business account and this is my personal account, and only personal bills get paid out of the personal account and only business bills get paid out of the business account. Only business money goes into the business account and only personal money goes into the personal account. It makes it absolutely clear for figuring out where you're at. It's really simple. It's really elemental. Absolutely, I recommend separating things out. I recommend it for clarity. I also recommend it for another reason, which is tax-oriented. And I've talked about this before. on other podcasts and also on some of my short form content. But here's something they used to say in tax school. Every American in their life will be audited statistically at least once in their lifetime. So, what can we conclude from that? If you have not been audited in the past, you absolutely will be audited in the future. If you get audited, and let's say you're unincorporated and it's okay to mix your money, if it's all a jumbled up, mixed up mess, when you get audited, they're going to ask for your banking records. It is inevitable. They're going to want to see your checkbook and they're going to want to see your bank statements. So it becomes really troublesome as the IRS is looking through your checkbook register and they're seeing business income and business expenses, and then they're seeing personal money and personal costs. The lines start to get blurred. And also, honestly, it's more mess for them to dig through. So if you want to have a clean and successful audit, it's so much better for the IRS, it's so much better for you if things are separate. If they want to audit the business, here is the business checkbook. Everything's in there, IRS. All the deposits are business income, all the payments, all the withdrawals are business expenses. It's absolutely clean and clear. Whereas if we have a combined thing, it's like, well, no, this one is personal and this one is business. Can you see where we're going with this? So if you would like to get the government in and get them out, if it's clean and separate, it's clear. It's clarity. But if it's all a jumbled up mess, they're going to be there hours and days and weeks. And if they're going to be there hours and days and weeks, they want to find something. So they're going to work harder. Don't make your life more difficult than it has to be. Keep things separate between business and personal, even if it is not required. It all comes down to habits. Here's another suggestion that I have in an area that I find where people sort of fall down or get themselves into trouble. I'm going to call this investing before testing. So if you have this harebrained idea, or I'm not saying it's a bad idea, but let's say you have a business idea. I can think of a friend of mine a few years ago who thought, I should start a coffee shop. You should start a coffee shop. All of us should start a coffee shop. In our town, I think there's a coffee shop on every corner. So do you think opening a coffee shop when there's one on every corner is a great business idea? It's a lot of competition. And you're either going to have to be just stellar and amazing, which how stellar and amazing can you be with coffee? Now, I have a personal coffee shop that I love. I would go there before any other coffee shop, but I don't know. What are the chances that you would go to the top of the market? So I'm saying maybe before you take the plunge into being a business owner with a big investment or being self-employed, maybe you should tiptoe into it. Maybe you should do some market studies and see what is out there, what competition. Ask a population, would they do business with you? Before you invest huge sums, secure a physical location, do websites, logos, branding, sales and ads and all that stuff. If you test it before you invest in it, honestly, that can really be a lifesaver. And I can tell you 1 million people who could attest to that. So that's what I have for today. And if there's something else that you would like to hear more about, feel free to drop it in the comments. Otherwise, stay tuned next time for the continuing saga of the top 20 mistakes that business owners, entrepreneurs, and self-employed people make. And as always, if you would, check out my site, myfavoritecpa.com, especially with respect to our first topic of the day here, choosing the correct structure and understanding who, what, when, where, why, how, the rules of the game. It can make all the difference between your success and your demise.